Volkswagen, das Auto.
Volkswagen Group is one of the world's largest automakers. They produce a wide range of vehicles, from standard models to luxury and electric cars, under brands like Volkswagen, Audi, and Porsche. It also provides financing, leasing, and insurance services globally. Key markets include Europe, North America, and China, with strong focus on expanding electric mobility and sustainable innovation. Let's take a look at Volkswagen Group's 2023 balance sheet, which gives insight into the company's economic foundations and strategic priorities. Starting with non-current assets, Volkswagen reports 360.7 billion euros, or 60.1% of total assets. This includes property, plant, and equipment valued at 66.9 billion euros, lease assets of 64.1 billion euros, and financial services receivables totaling 94.5 billion euros.
Moving to current assets, which make up to 39.9% of total assets at 239.6 billion, we see 53 billion in inventories and 43.4 billion in cash and cash equivalents. Financial services receivables also hold a significant portion here, amounting to 66.4 billion. This strong liquidity position ensures that Volkswagen can meet short-term demands and remain adaptable in a fast-changing market. On the liability side, non-current liabilities total 204 billion, or 34% of the balance sheet. This includes 122 billion in long-term financial debt and 29.7 billion in pension provisions. These long-term obligations support Volkswagen capital-intensive projects like manufacturing and research and development essential for the automotive industry. Current liabilities total 205 billion, or 34% of the balance sheet, with 110 billion in financial liabilities and 30.9 billion in trade payables. Such high current obligations align with the financial services Volkswagen provides to customers, reflecting the group's operational turnover. Finally, equity is 189.9 billion, representing 31.6% of total assets, including retained earnings of 147.8 billion. With strong equity, Volkswagen is financially resilient, capable of withstanding market shifts and securing favorable financing.
An interesting note from Volkswagen's balance sheet involves lease assets under their property, plant, and equipment PPE segment. As of 2023, Volkswagen reports substantial rights of use assets for leases, reflecting a significant commitment to leasing office equipment, real estate, and production facilities. For short-term, low-value leases, Volkswagen opts not to recognize these assets and instead records lease payments as expenses, helping to streamline operations and reduce asset recognition for minor leases. This approach aligns with the flexibility needed in global operations.
Volkswagen Group's 2023 income statement highlights robust financial performance with the total sales revenue of 322.3 billion. This was driven by strong vehicle sales and a favorable product mix. The cost of sales was the largest expense at 261.3 billion, covering production and material costs, leaving a gross profit of 61 billion, about 19% of total revenue. Following this, distribution expenses totaled 21.3 billion, which included shipping, sales promotions, and advertising costs, supporting Volkswagen's global reach. Administrative expenses came to 12.7 billion, covering corporate and staff overheads. One interesting note is Volkswagen's hedging strategy. The company's operating result was affected by hedging costs of around 3.2 billion. This reflects the impact of commodity price volatility and highlights Volkswagen's proactive financial risk management.